Hello everybody, my name is Alan Ellman, the Blue Collar Investor. I've made this video to show you how easy it is to sell covered call options using my cashing in on covered calls system. Now today is Friday, January 2nd, the first Friday in 2009. There are only 2 weeks left to the January expiration, so rather than sell a January call, we're going to locate one of the greatest performing stocks in the greatest performing industries and then sell the February call. Now that call, the February call, expires on the 20th of February. Therefore, there are approximately 7 weeks until expiration. Now, to annualize our returns, we're going to need to multiply the return by 7.5 because there are approximately 7.5 7-week segments in 1 year. So the first step to our system is to locate a great performing stock in a great performing industry. Our starting point is the IBD 100. That list is found every Monday in the Investor's Business Daily newspaper, which I'm going to hold up for you now. Okay, just turn to page B1 and you'll see this list. When we go through the list, we select all those stocks that are optionable. This particular case, I've selected a company called LHC Group, the ticker symbol LHCG. Now, our first screen, we go to the IBD website, investors.com, and we go to the stock checkout page. I'm going to show you what that looks like in just a moment, but first I want to tell you that sometime in February or March, IBD will be enhancing its website, and this particular screen will change slightly. Now it will actually change for the better. It'll make the screening process easier, more efficient, and just as accurate. I'll keep you informed as to the changes as we get closer to that date. For right now, I'd like to show you what that screen looks like on the IBD checkup site. And I'm once again holding up what that screen looks like. As you can see, everything that I've circled, all the key screens here, are from A- to A+. A+ being the total component of all the others. So we have a very, very strong stock fundamentally here. Okay. After we pass that screen, the next one we go to is the MSN Scouter screen, or the risk reward. Okay, once again, I printed out what that screen looks like for this stock, LHCG. And what we do is we look for the number when we type in the Scouter. Here you can see we have the number 7, which more than meets our minimum criteria of a 5. So far, so good with the first 2 screens. Next, what we do is we go to the technical analysis. Now, this is a part that many of you have difficulty with, but in my book, Cashing In on Covered Calls, I devote a big chapter, I believe it's chapter 9, the longest chapter in the book, to this one subject. So if you feel like you haven't mastered technical analysis, please reread that chapter until you do. And once again, it's not rocket science. What we do is we go to a site, a free site that I give in my book, stockcharts.com, and set up the default setting to the way I've described it on page 85 of my book. Now, here's what the chart looks like when we set it up. Okay, this is from stockcharts.com, and I hope you could see it okay. What we look for on the top of the chart is we look to see if we have uptrending moving averages. In our case, we default to the 20-day exponential moving average and the 100-day exponential moving average. Okay, we'd like to see the 20-day EMA in an uptrending fashion. We want to make sure that the 20-day or shorter-term exponential moving average is higher than the 100-day longer-term EMA. In this case, you could see that that is the case. Now, the shorter term, just in case you can't read it, is the blue one. So the blue line is a higher than the red line. We also want to see that the MACD is in positive territory, and in this particular case, number 2 you could see that the MACD just turned positive after being negative for a couple of days. We look to number 3, we see the stochastic oscillator is uptrending and is just below the overbought 80 percentile line. Now, as I say in my book and DVDs and all my seminars, I've seen stocks remain in the overbought position for months. So if it does break through the 80th percentile line and is above it, I wouldn't panic. That could stay there for a very long time. However, if it drops below the 80th percentile line and comes down and then goes past it again and comes down a second time, that's a negative indicator, a bearish indicator. So I'd become a little concerned at that point. Right now, these indicators are all confirming positive. And number 4, we look at the trading volume. I drew a red line across the bottom of that where you could see what average trading is, and you could see that pretty much this stock has been trading in an average range for a long time. So although we'd like to see it above average, in today's market, which is a very down market, very few stocks are going to be trading in a much higher volume because many less people are actually involved in the market than in the past. But right now the volume is certainly not telling us that all the positive indicators are something we shouldn't look at. You know, basically they're saying that everything is average regarding the volume. So it's not going to discourage us from the positive indicators we see in 1, 2, and 3. So from a technical standpoint, this stock is still in because we have positive indicators up and down the line. I would say that it's mildly positive because we don't have strong volume and the MACD is just barely turning positive, but the moving averages are quite positive, as is the stochastic oscillator. So I would say mildly positive for this particular equity. Now, before we run our calculations, what we do is we check to make sure that there is no upcoming earnings report to discourage us from selling that particular call option. And I checked, and the earnings report for this stock is next going to be reported on March the 5th. And since the February options expire prior to that, February 20th, the earnings report is not a factor. Okay, so now what we do is we go to our options chain, and I'm just going to show you the chart that I pulled up on that. And the options chain, I give you a few free websites you can go to when you're pulling up the options chain.